Hello, this is Vince from Sniper Day Trading, and what you're looking at is a 120-minute bar chart of the S&P 500, the NASDAQ Composite, and the Dow Jones. Each bar represents 2 hours, and I just wanted to point out a few things. Had 3 or 4 different turning points here in this time frame, identified by the red here, green here, red here, and green here. You can see over the last some time here, we haven't really made a whole lot of progress as far as any breaking into any new ground. Most of the price action has been just sideways, and you can see especially with the NASDAQ Composite, it's well below its previous high, and you can see from this previous low over here that we broke through that over here. Not super decisively, but it did break through. And the S&P, you can see here the low was here, and we still managed to stay maybe a good 20 points above that low, where the Dow was up substantially off of its previous pivot low. But now that we've made the turn and we're accelerating to the upside, 10,314 would be somewhat my first target. I'd like to see how prices react once the Dow gets up to that level. It's less than 100 points away. This would probably put this NASDAQ Composite at then again another top, double top up in this area, and then the S&P may be slightly higher, possibly just about a double top as well. But the Dow, you could see, is outperforming. So anyway, those are the turns as I see them. And also I've got some circles here, give you a little clue on how to spot. This is something completely different off the subject. Sir, I can't remember exactly what they call these in as far as candlestick charting. I don't know. I call it, I've seen these and noticed these long time ago, decades ago. I call them a tail. I think they might be called a doji, or I can't even remember the name, but there is a name for it. And it's basically a reversal. When you see prices trade to high and then close back on the lower half or towards the bottom, usually signifies a reversal. In this case, on the NASDAQ, the gapped open up here, traded a little higher, and then closed all the way at the bottom of its range. And that usually signifies, again, a reversal. Just notice this first little one here. 2 days, basically, this day traded lower and then pulled up. There's some ones that are a bit more clear. I go backwards and show you. Originally had this set at like an hourly chart, and so the 2 hours are roughly about the same. Here we traded low, and usually you'll see these turning points at an extreme, whether it be a high or a low. But in this case, you can see that it actually happened even within the middle of the trend. Started to sell off and then closed towards the high. Let's see. Go back quickly so I can show you a bunch of these little examples. You could see here it traded high and then closed to the low end of the range. Again, did something just like that here and then sold off. Again, traded low, pulled back up to the high end of the range, and then look what, you know, we had multiple days of up trading after that. Here we had a couple of days in here and in here, traded high, then closed right at the low, and then we had some down movement after that. Let's see if there's a few more in here. There's one right in here. This actually too didn't close at the high end. It closed somewhat close to the middle, but this here closed to the better half of the middle. And there's a couple. These are really good ones here. This one here, you can see how the Dow and the S&P all doing the same thing, and then this here. And for the most part, those are pretty good indicators on how to spot turning points in a hourly or daily, especially even a daily. But that's just something quick I just threw in there just to show you how to read price actions one way. Vince at Sniper Day Trading.